Well, hello everyone. Thank you for joining us for a conversation on fast tracking your time to cash in healthcare. I'm your host today. My name is Alex Preston, and I'm the account executive with Epic River Patient Lending. I'll be guiding our conversation as we discuss trends real business offices and rev cycle teams are experiencing and how the Epic River solution has been deployed to aid them with some of these challenges. We also have a few other members of the Epic River team to aid in the discussion as well. We have Jess, our Director of Product. Jess is an integral part of the Epic River team. Her expertise covers all of Epic River's services offered, spanning from our relationships with community banks to healthcare providers. Her role largely surrounds smooth deployment and usage of the product. Today, she'll be giving us a brief demo of the platform and the ease of use for patients and healthcare providers. We also have Norm on the webinar. Norm is our client success manager, where he works with our existing healthcare providers to individually create the most impactful and utilized tools for rev cycle teams. Norm offers a rev cycle analysis perspective in a number of settings and gives an expert insight into some of the challenges that we face. Would either of you like to say hello or add anything before we get started?
Hi, everyone. Looking forward to speaking with you today. Thanks for joining.
Awesome. Thank you guys for taking your time to join the webinar, and feel free to add anything at any time. Norm, Jess, and I hope you guys will find this webinar. We'll give you some actionable steps that will help you identify new cash on hand, some inexpensive alternatives to internal payment plans, and leverage your existing community banks to reduce cost. So to give you some background, since 2005, Epic River has delivered innovative software solutions to healthcare providers, financial institutions, and patients. A patient financing solution has been deployed and offered at hundreds of healthcare sites across the US by using software to connect our extensive list of contracted local community banks with healthcare providers that they may already be banking with or just exist locally in their community. We currently work with a range of providers across the continuum of care, from large health systems to health networks to individual practices and clinics. So our provider benefits from this patient financing solution have been traditionally the same over this time. Things like significantly reducing cost to collect, accelerating cash flow, so same-day cash, increased net collections. We can improve patient satisfaction with self-selected monthly payment amounts, loan qualification regardless of credit history, and extended terms. There's also no hidden fees, and these loans funded and administered by a trusted financial institution. So this frees up a staff time to continue focusing on other areas of business. These points have recently taken a new form as 2020 has progressed and compounded issues that had already existed. So some of these issues you may already be familiar with, but the patient pay crisis was at an all-time high before the 2020 waves hit. With significant increase in high deductible plans, we witnessed an affordability crisis in most healthcare settings. With deductibles growing faster than incomes, larger portions of household incomes are being taken up, leaving more people underinsured and in need of financing solutions for healthcare. Often the only solution is a high interest medical credit card or borrowing money from a far less savory source. Even then, 88 billion was borrowed in 2019, and only 55% of that was ever collected. Now with 44% of adults inadequately insured, there's a huge population of patients that will be owing healthcare providers moving forward. So this issue has been compounded by the crisis points of 2020 and have created an absolute necessity for healthcare providers to be proactive in streamlining financial experiences for patients. This will be especially important as more patients face their own personal financial issues as layoffs, furloughs, and job losses impact their medical insurance coverage and their ability to pay for medical care. For patients, the payment alternatives have never been greater. Pricing transparency rules, high interest rates, and higher healthcare costs have created the need for easy to use and transparent payment methods. Traditionally, providers have helped offset some of this burden by offering in-house financing options or internal payment plans. A model we're very familiar with being paired with as a more robust patient financing solution. Internal payment plans offer some great benefits, right? They expand patient payment options for treatment, allow healthcare organizations to establish patient payment terms and interest rates that actually fit their organization's priorities. They enable healthcare providers to handle collections in a way that manages the patient relationship. And the reality is there's no fees to a third-party organizer. The downside, however, is that payment plans are not enforced consistently and effectively. Patients might meet needs might be months, if not years, to pay off the balance, which can result in incomplete payments or uncollected accounts. If patients do stop paying, organizations are forced to either write it off or turn to a collection agency. And there's a high administrative burden. Providers offering in-house financing also open themselves up to new compliance and regulatory requirements as well. It can really take a long time for the cash to be able to be utilized. So for providers, rev cycle teams have never been more strained. In many ways, the coronavirus emergency created the perfect storm for the American healthcare industry, straining resources and testing the resolve of both administrators and frontline health workers. It prompted providers to fast track the adoption of telemedicine protocols while simultaneously dealing with unprecedented budgetary shortfalls and staffing furloughs. As non-emergency visits and procedures grounded to a complete halt, effectively eliminating large cash reserves and excellent credit ratings. This doesn't even account for the cash that will soon be due that is required to repay the Medicare loans that were set to be due this month by CMS this month. These stressors have significantly hindered the ability for internal payment plans to be an effective way to extend terms and increase affordability to patients while driving profitability for healthcare providers. So it's for this reason that Epic River has been utilized to offload existing payment plans and put cash in the hands of the providers and reduce the workload on business office. So I have Norm here who will review some of the ways that we've seen this be actually utilized in the last couple months and the advantages providers have seen. Norm?
Thanks, Alex. Yeah, so as we've been discussing today, we're in an unfortunate situation in healthcare where the average percentage of provider revenue that is owed directly by patients is in the 25 to 30% range. As recent as 15 or 20 years ago, this number was as low as 5%, 4%, 3%. So this is a very new challenge that the healthcare industry has had to face just in the past 10 or 15 years. And it's one that's not easy to address. It's way easier to get paid by insurance companies than it is by patients, and that's just how it works and the fact of the matter. So the ways that, as I'm sure you're aware, the ways that healthcare providers have been dealing with this patient pay crisis is to be offering payment plans and administering them yourselves. And those offer a lot of benefits to the patient and in some extent to you. But there's some unforeseen costs that come into play when administering internal payment plans, and that's what I was hoping to chat about a little bit today. So first off, I think a big piece to focus on is the fact that internal payment plans are way more costly than a lot of organizations realize. So there's really three factors that come into play. The first and the largest by a long shot is collection costs. So internal payment plans are costly to administer. I'm sure you all realize that, but let's just break it down really quick for a minute or two here. First off, you have the actual labor that's involved in administering these payment plans. You have to set them up. You have to talk to the patient on the phone about, the term, the balance, the amount of time. Two, you have to be sending statements on a monthly basis to let them know what the remaining balance is. You have to process the payments, whether that's the labor of manually processing paper checks, whether that's the merchant processing fees from credit cards and debit cards being paid, an additional percentage that an online patient billing portal is charging as well. There's a variety of different costs that come into play. But really, what it comes down to in the end, when you put all the numbers together, a payment plan on average costs over 10% of the balance of the account to administer. So that is a huge percentage of a loss on an account, and that's, I think, a piece that can sometimes be understood as a benefit to the patient and a loss to provider. But I do think it's an important point to make that it's actually a loss to both the provider and to the patient. In the way that that's a loss to the patient as well is that the provider is losing 10% over the course of the time of that payment plan. But the patient is also losing in the fact that they're still paying in full. So they're still paying that entire account balance over that period of time. And so that 10%, 15%, 20%, depending on however that payment plan is being administered, that is lost to complete and total inefficiency in the system. That loss is going to come back over the course of years in terms of increasing costs, increasing prices, to make up for that 10% loss that's been incurred in years past on those payment plans. So I think that's a really important piece to realize about administering payment plans and why it's not a good deal for you as a provider or for the patients themselves. And back to that first number, this is a large and an increasing percentage of accounts for your organization. Currently, it's 25 to 30% of your revenue is coming from patients, depending on your organization. And that's only growing. And so having a program in place and processes in place to be able to handle that percentage of your revenue for patient payments is really important. So at this point, I'm going to go ahead and pass it off to Jess so that she can give a quick demo of our platform and what it actually looks like in terms of how you'd actually, book these loans and process the whole payment side of things for your patients.
Great. Thank you, Alex and Norm. I'm going to start sharing my screen here and we'll walk through a demo of our platform. So what Epic River does is we bring the technology to really connect the healthcare provider with that local bank as well as with the patient to create these loans and really be able to fit in the patient's budget. So these loans can be initiated by a number of different ways. The patients can sign up on their own, so it can all be directed by them. The healthcare provider, we do have some integrations to different billing systems that allow us to grab, what is currently outstanding and what's eligible for the patient to sign up for this loan. So either way, the patient will end up using our platform to pick their terms as well as electronically sign those loan documents. So they'll land here on this screen. We will co-brand it between that healthcare provider and the local bank to introduce that relationship to the patient. They'll be able to verify their identity. This can be done a number of ways. For this one in particular, I'm entering my social, but I can verify my identity with a couple other pieces of data if needed. And on the next screen, this is really where the benefit to the patient comes in. There's a lot of different options for the patient on these loans that we really try to make sure it will fit in their monthly budget. You'll see here for this particular patient, we're offering a 0% interest period. So you'll notice that if I pick a term anywhere within 18 months, the patient would be set at a 0% interest rate. Over here on the right side, we'll see that finance charge would be 0. And really, they're just breaking up this $3,300 bill over the 18 months. So this is a nice option for those patients that can afford those higher monthly payments. They'll be able to stretch it out and not have to pay any additional interest for that time period. We do have a lot of patients that need a lower monthly payment though, and that's where these other terms come into play. They can still lower that monthly payment down. So if we need to go all the way down to say $70 per month, you'll notice that is an option. Our finance charge has been updated on the right side to reflect that there's now an interest charge. So there's a lot of flexibility here. The specific parameters will be set when you sign up with a local bank. So you'll be able to adjust this and really meet what your patient's needs are. So if you currently offer an internal payment plan of 24 months, we could match that with a 0% term for 24 months. So from the screen, once the patient is happy with that monthly payment, they're going to go on to the next screen. And on the next screen, you'll see an additional incentive that we offer the patients if they do sign up for automatic payments. We actually offer a rate discount. So you'll notice my 10% rate dropped down to a 9% rate, my finance charge lowered. It'll show you how much they can save. They can save almost $100 in this case if they sign up for those automatic payments. So that's a nice option. It also helps patients just simply remember to make their payments and not have to transfer that each month. So I'll sign up for auto pay just because I want my discount, save a little bit of money. So I'll enter my routing and account number. And on the next screen, this is where I'll go to sign my documents. So I've now picked my term. I have my interest rate lowered since I signed up for auto pay, and I'll be presented with those loan documents. So the loan documents will reflect when their payments are due and how they can make their payments, everything like that. On this screen, I happen to be on a touch screen, so I'm just going to go ahead and scribble my signature in here. And they can do this on any device, any phone, computer, tablet, anything they may have access to. If you do have some patients that just aren't comfortable doing this on their own, they can always come into the healthcare provider's office and they can complete these electronically with your assistance. But for the most part, especially today with the remote world that we're operating in, a lot of patients can just do this from home or from work, wherever they may be. So once I create my signature, I will sign a consent document. This is consenting to the electronic transaction. So this is to receive the documents electronically as well as sign the documents electronically. So if you've ever signed up for online banking, it's basically that same consent that you sign when you go through that process. So they'll just click to apply that signature they've created. And on the next screen is where they'll be presented with those loan documents. So these loan documents will reflect the terms that they've selected. So I believe I selected a $70 monthly payment. It was dropped a little bit since I signed up for auto pay. So I'm at that $68.50 for 60 months. And all of that will be reflected in here. A couple other nice things about these loans is there's no prepayment penalties. So they can pay these off whenever. So I signed up for the full 60 months, but if I can pay these off in 2 years or 3 years, there's no fee for doing so, and they'll actually just end up saving that interest cost and end up paying less overall. There's also grace period, so they'll be able to see their monthly payment when it's due and be able to pay that. So we'll go through and they'll just click to sign that document. It will display the bank's name, their address, phone number if they need to contact them at all. The next form they'll sign here is a Telephone Consumer Protection Act disclosure. This is just granting the bank the right to contact the patient at the phone number that they've provided. And then finally, I did sign up for auto pay, so this is my auto pay authorization form. So we'll sign our last signature here, and they'll be done. So we'll go ahead and click finish signing. And from here, they will be able to download a copy of these documents for their records. Another thing to note is it doesn't necessarily have to be the patient that signs up for the loan. It could be a guarantor, it could be a parent, spouse, anyone that may be responsible for this cost. They have the option to sign up for that. So at this point, all the documents are complete, and our platform will automatically send this loan over to the financial institution that your healthcare provider has been partnered with, and they will review and fund that loan within 2 business days. And so that full, in this case, $3,300 would be deposited directly into the healthcare provider's bank account. And so you'll receive 100% of the funds up front. The patient's account will be marked as paid on your side, and from there, the bank will take it from there. So they'll send out statements, they'll collect those monthly payments, and they'll be able to make any adjustments if the patient moves, if the patient needs to change their bank account that they're using for auto pay. All of that will be handled with that bank. So that's all I really wanted to demo today. Alex or Norm, was there anything else you would like me to share?
No, thank you for giving a nice thorough overview of the demo. Much appreciated. That brings us to the conclusion. We hope that you were able to have some useful tools from this webinar. The biggest takeaways would be an easy solution to offload an inexpensive alternative to internal payment plans, leveraging your existing community banks to reduce costs and identify new cash on hand. Norm, do you have anything else you'd like to add?
Yeah, I think just we always have to keep in mind the patient experience when we're talking about these sorts of things. Patients are in a tough situation these days. This is often unexpected visits, to the hospital or however it ends up happening. It's not something that anybody ever likes. And putting them in a tough position of whether they can pay off a certain balance within a certain amount of time or being sent to collections is a difficult decision. And you don't want to be putting your patients in that position to make that decision. And so having a program like ours to be able to offer, whatever works for them, 2 years, 3 years, 5 years, whatever the amount of time is and whatever the monthly payment that they can afford. It's not just about being good for you financially as an organization, even though it is. It's not just about it being financially beneficial to a patient as it is, but it's about actually getting your patients to come back to your organization next time and making sure that they have a good experience overall and they feel comfortable with the situation that they're in at that moment.
Well said. Well, if this is a model you'd like to explore further, Norm and I will be reaching out to some of the attendees throughout the remaining week. You can also send us an email at the email posted on the screen, and we'll be happy to follow up with you and truly evaluate the cost of your internal payment plan and explore any cost savings you can unlock by offering Epic River patient lending in your community. Thank you so much for your time today.
Thanks, everybody.
Thank you, everyone.